Scan to unlock Sovi and ace your tests.
Income taxes drop, and one answer pops fast if you track short-run aggregate demand effects on prices and unemployment instead of chasing random explanations.
Income tax rates falling means households keep more disposable income, so consumer spending usually rises right away. And that is the key first move because spending drives demand.
When household spending increases, aggregate demand shifts to the right in the short run, which means firms sell more output, hire more workers, and face upward pressure on prices. So the short-run result is a higher price level and lower unemployment, which matches choice E because household spending is the reason demand rises.
Well done! Scan now. Trap, signs, and rushing. Rule, trust the given change, then check each step to match the short-run effects correctly.